The American town square is changing. For generations, the local bank branch stood as a pillar of the community. It was a place to deposit your paycheck, apply for a loan, or simply get financial advice. Today, these branches are disappearing at an alarming rate. Banks are shutting down locations, leaving customers to wonder about the future of banking. The numbers tell a stark story. In recent years, thousands of bank branches have closed their doors across the United States. This trend is driven by a confluence of factors, all pointing towards a seismic shift in how we manage our money. The days of walking into a branch to conduct your banking are dwindling. One of the most high-profile examples is TD Bank. The bank recently announced the closure of nearly 40 branches, including 6 in New Jersey alone. These closures are part of a broader strategy by TD Bank to adapt to the changing financial landscape. As more customers embrace online and mobile banking, the need for physical branches is diminishing. This trend is not limited to TD Bank. Across the country, banks of all sizes are grappling with the same reality. From small regional banks to Wall Street giants, the message is clear: the traditional bank branch is becoming an artifact of a bygone era. The rise of online banking is perhaps the single biggest factor driving the closure of bank branches. With a few taps on their smartphones, customers can now perform a wide range of banking tasks from the comfort of their homes. Need to check your balance, transfer money, even deposit a check? There's an app for that. This shift towards digital banking has been accelerated by the COVID-19 pandemic. As lockdowns forced people to stay home, many discovered the convenience and ease of online banking. Even as the pandemic recedes, these habits have persisted, fundamentally altering consumer behavior. Banks, in turn, have recognized this shift and are adapting their business models accordingly. For banks, online banking offers several advantages over traditional branches. Firstly, it's significantly cheaper to operate a digital platform than a network of physical branches. The costs associated with rent, utilities, and staff are dramatically reduced. These savings can then be passed on to customers in the form of lower fees or higher interest rates. Furthermore, online banking allows banks to reach a wider customer base. Without the constraints of physical location, banks can serve customers across state lines and even internationally. This is particularly appealing in today's globalized economy. While the shift towards online banking offers undeniable benefits, it's not without its downsides. The closure of bank branches has a real impact on communities, particularly in rural areas and underserved neighborhoods. For many people, especially the elderly and those without reliable internet access, a local bank branch is their only means of accessing financial services. The closure of these branches can create banking deserts where residents lack access to basic financial services. This can make it difficult to cash checks, pay bills, or access credit. The consequences can be severe, trapping individuals in a cycle of financial instability. Beyond the impact on communities, the decline of bank branches also raises concerns about job losses. As banks close branches and automate services, many tellers and other branch employees are finding themselves out of work. While some may find new positions within the banking industry, others may struggle to find comparable employment. Moreover, some customers simply prefer the personal touch of interacting with a human teller. They may feel more comfortable discussing their finances face-to-face, or may not be comfortable with the technology involved in online banking. For these customers, the closure of bank branches represents a loss of a valued service. So, what does the future hold for banking? While the trend towards online banking is undeniable, it's unlikely that physical branches will disappear entirely. Instead, we're likely to see a hybrid model emerge, one that combines the convenience of digital banking with the personal touch of human interaction. Banks may opt to maintain a smaller network of flagship branches in strategic locations. These branches could offer a wider range of services such as financial advice and investment consultations. They could also serve as community hubs, hosting financial literacy workshops and other events. At the same time, banks will continue to invest in their digital platforms, making them even more user-friendly and feature-rich. We can expect to see advancements in areas like artificial intelligence and voice recognition, making banking more intuitive and personalized. The future of banking is likely to be a balancing act, finding the right mix of digital and physical to meet the evolving needs of customers. While the traditional bank branch may be fading, the fundamental role of banks in our lives remains unchanged. As technology continues to reshape the financial landscape, banks will need to adapt and innovate to thrive in this new era.